Hello, I'm Taj Singh, President and CEO of Discovery Silver. I'm pleased today to be with you for a few brief minutes to discuss some key highlights of our updated mineral resource estimate for our flagship Cordero silver project located in Chihuahua, Mexico. This presentation is made to accompany the press release disseminated earlier today, and all the details, as well as the appendix data and images and associated links, can be found in that release. A lot of work has gone into this resource estimate, 2 years of flat out work, much of it during the pandemic conditions, and I would like to acknowledge the great work done by our Mexican team in that time. We're very, very pleased with the results, and we believe this resource puts us in a fantastic position to deliver a very strong preliminary economic assessment in a few weeks' time on Cordero. In our first slide here, we just give very high-level points on the input and assumptions that went into the resource. The overarching theme we're conveying here is how technically robust and defensible this resource is. The data set is enormous, the inputs are very realistic, and the model is very well constrained. So first, looking at the size of the drill data set, very large, obviously, 224,000 meters, 517 drill holes. That's almost a double on the previous resource estimate prior to us acquiring this project and working on it for the past couple of years. For the first time now, you'll see this model incorporates geological and structural constraints. In fact, all of the previous holes, which were archived beautifully in pristine condition, just under about 300 of them, they were completely relogged geologically so they could tie in with our new interpretations of the deposit. As noted here, the resource is pit constrained as a very impressive strip ratio, 1.1. And the pit constrained assumptions were all backed by third-party experts and some of the best in the industry using extensive databases and calculations and studies. So you'll see here, the recovery assumptions here for the metallurgy are based on an extensive program we carried out in 2021 based on our recent drilling. And it's important to note that the composite samples used in the met testing are spatially very representative of the deposit. And we tested each rock type individually and across also the various different pit phases. So we have a very good profile of the performance across the mine life. Mining costs here noted are based on owner mining and obviously based on rock properties and haulage profiles. And mining costs also take into account cost escalation as the pit deepens, which again speaks to the rigor applied to the calculations and estimates. Processing costs and site G&A were supplied by Osenko Engineering, one of the world's most well-known process engineering firms, and the firm that is actually currently involved with the build of the process plant for Silvercrest's Las Chispas mine in Mexico. For the first time here, the resource has been categorized into two main types of mineralization based on metallurgical processing. You've got your sulfides, which is the engine room of the deposit, processed by milling and flotation. And then for the first time, oxides and transitions have been categorized, which make up a relatively small part of the deposit, but show high potential for low capital and immediate cash flow via heap leaching. It's also important to note, last point here at the bottom, the net smelter return methodology was used for calculating cutoffs, which is the more common and actually more robust way for polymetallic deposits, as opposed to the previous resource for Cordero, which used silver equivalent cutoffs. So an NSR in our view is much more realistic method because it takes into account met recoveries, payabilities, treatment charges, and refining. And so based on the costs outlined above, our base case cutoffs, also sometimes referred to as internal cutoffs, for sulfides and for oxides respectively are 725 and 478 per ton. And that generally is the cost to break even on processing and G&A costs, which is the typical industry standard for setting internal cutoffs. Looking at the highlights on the sulfide resource, we're seeing here the base case resource at the 725 per ton NSR cutoff, total resource of about 940 million ounces, averaging 46 grams per ton silver equivalent. Obviously very large, as we know Cordero is one of the largest primary silver deposits in the world. But a key point here is that close to 90% of this is in the M&I category, which speaks to how far this project has been advanced And it's a huge step forward from the previous reserves. Another key positive point to note is that a vast majority of the contained metal in the huge base case resource are actually high-grade ounces. If you look at the high-grade subset based on a higher cutoff, you're sitting there with over 500 million ounces of silver equivalent grading over 100 gram per ton silver equivalent. And it's really this mineralization that will be the real driver of the economics of the PEA. But the nice thing is also that Cordero, there's some very obvious growth opportunities within the deposit. We'll talk about that when we look at some of the sections, but in the far northeast, there's definite potential for expansion of the pit, as well as we've talked previously before, the high-grade vein potential that exists in the veins that flank the open pit area. Looking at the oxide resource here, which is the weathered material starting at surface above the large sulfide resource, very encouraging for my MET testing program. The first heap leach testing program done in Cordero material was the recoveries we saw from the heap leaching of Cordero oxides in transition. So this is stuff you would have to mine first anyway, would have likely been strip or stockpile material, but showing, again, as I noted, very good recoveries, very good leach kinetics, as outlined in our MET testing release in September. Again, to note, this material only considers silver and gold economic. Base metals are not recovered and are thus given zero value in the resource. And really, this material represents early stage cash flow. And you could be in a position where mine is cash flowing while the build of the sulfide plant is still ongoing. And again, just as we did the sulfides in the previous slide, if you look at a high-grade subset of this material, you see over 30 million ounces of silver equivalent, again, just gold and silver, primarily silver, most of which is grading around 60 gram per ton silver equivalent, which is the M&I grade. So very, very good, juicy grades, and that's the driver of the economics for these oxides. So kind of to put that in perspective, both with the sulfides and oxides, as is typical in our industry, we will look to use lower commodity price assumptions for developing a mine plan. We will be, using various cutoffs, higher cutoffs in the early part of the mine life, again, to drive economics, optimize NPV, payback IRR, capital intensity, etc. So really, out of the larger resource for the mine plan, a subset of the sulfides will be taken, a subset of the oxide will be taken, again, which will be used to optimize the metrics I talked about. Ultimately, we are targeting a production rate averaging at least 15 million ounces of silver equivalent for at least 15 years, with costs in the lowest half of the industry cost curve. And just to wrap up, we'll have a quick look at some long sections to give some context of the deposit. This is a plan map of the deposit we're looking at here, and then it shows the trace lines of the long sections, on the sections that will follow. If you look at the line 8A prime, that's through the north corridor, and B to B prime is through the south corridor. A good way to look at the deposit is looking at the two main parts of it, the north and south corridor. In terms of kind of, mine phases, you look at the Poza de Plata area, that is going to represent the first stage of sulfide mining. It has the highest grade, lowest strip. You would then push back into the second phase of mining in the northeast extension. And then in the south corridor, you actually have the oxide starter pit. That's where the very good grades of the oxide are. And then what eventually becomes the third mining phase of the sulfides is in that south corridor as well. Looking at long section AA prime through the north corridor, you see a very obvious starter pit here, beautiful high-grade, low-strip area, essentially starting at surface in Poza de Plata. Once through that, as I noted, we push back to the northeast, and there's some very nice grades in the northeast extension. And as I noted before, there's actually a zone in the far northeast which has received limited drilling, very limited drilling, and it's one of our key growth areas, potentially to bring grades up with more drilling, which we've seen, we've had before. Working on this deposit and potentially even add tonnage. So our focus over the next 12 months will be to grow the resource and to look for near surface high-grade mineralization, and this represents one of the key growth areas. And lastly, looking at section B prime, this is through the south corridor. Everything above this sulfide line here at the top is oxide transition material. You see some very nice grades of oxide transitions here. So that's the starter pit for the heap leach material. Then that leads into some very nice high-grade sulfides down below, which have great continuity, which will be the third phase of the mining. So that is a brief overview of the resource. Again, we're very pleased with the results, and we look forward to continuing to advance the project through the release of our PEA in a few weeks' time.